Hello and welcome to a new episode of Dividend Data. Now you may notice, this is not my usual recording location. I'm on vacation. It's a family vacation in Bethany Beach that we do every single summer. So I still wanted to make a video this week, of course, because I'm trying to be consistent, no missing. However, this isn't going to be a normal portfolio update or stock analysis video. Instead, I'm going to be taking questions from the audience and doing a little Q&A session. Topics will be primarily around investing, personal finance, and stocks. All right, so question 1 from Joseph Lance. How are you able to invest so much at a young age? I'm investing heavily, but I can't keep up with you, LOL. Well, it's primarily just because I've saved and invested most of my income growing up. During high school, I had a part-time job. I also worked with my best friend. We had a business reselling things on Amazon that he still actually runs today, and I left before I went to college. So when I was 18, I actually was able to make around $30,000 in the year before going to college. And I saved and invested all of that. And, I had internships throughout college and different business projects. And then I started Dividend Data, doing YouTube as well. Dividenddata.com, that was another big income source. And basically just saving and investing. I was lucky in the fact that my parents paid for my education, and I come from like a good family growing up. So that set a good foundation. And I didn't have to go into debt or anything like that. Probably wouldn't have gone to college, to be honest, if that was the case. Also, post-college, I lived at home with my parents for a while, and that helped me save money on rent. So I was still able to save and invest most of my income. And to be honest, so far, I do have the goal of increasing my income over time, but so far I've never had that high of an income, but I've been able to build a pretty decent net worth now, around 260, 270,000, depending on the week, and continues to grow over time. And by the way, guys, I'm 25, about 3 years out of college or so that's a little context for you guys. Question 2 from the Beast Gamer Harris. How is your family doing? My family is doing great. I'm on a family vacation with my dad, my mom, my sister, my future brother-in-law, my aunt, my cousins, and we come here every summer for a week. We've been coming since I was a child with my grandparents used to take us. Now they're dead, but we carry on the tradition. So that's great. Next question is from Christian Gardner. Does Dividend Data have an app? It does not have an app. Right now it's just a web application, and you can use it on your mobile browser. And I've been trying to make improvements in optimizing the mobile app experience. But the reason why I don't have an app is because basically I'm the solo developer on dividenddata.com. It basically would make me have to have 2 different code bases I focus on, and it would slow down development. So I've really just focused on the web application. The real goal is just to increase the usability on the web application side and just make the experience much better from that standpoint. Long term, maybe we'll have a mobile app, but not right now. And by the way, if you're wondering, 4th of July, we have a 50% off sale on dividenddata.com. That's both the monthly and annual plan. Use the promo code SUMMER at checkout, SUMMER. This only lasts through July 4th weekend, so get it while it lasts. The sale's been great, so thank you guys for the support. I have a couple updates, which I'm really excited about, that are going to come out in the next month. And the updates are just going to keep coming. Oh, and by the way, with this sale, you lock in that low price for life. It does not renew at the higher rate. It renews at your discounted rate. Okay, here's a question from Top Line Growth on YouTube. How do you see the future of big oil, Exxon, Chevron? Is it a good long-term investment for young dividend investors in their 20s? So I would say that it can be a good long-term investment, but it just has to be at the right price. And currently, I would not say the current price, which Exxon is around $120 per share, I would not say that's a good entry price for a long-term investor. I don't think you'll get the best total return at that current price. But when people say that big oil is going to go out of business anytime soon, I think they're just greatly mistaken, and it is highly unlikely. There will be about a 20-year transition where gas vehicles are a lower part of the transportation in cars as more of them become electric, but that's only part of the pie of where oil and gas is used. You also have the entire petrochemical industry, which is used for all different plastics and packaging and fertilizers and all of these different things. And Exxon specifically, that's why I chose to invest in them. They have a very large chemicals business. And both of these companies are also investing heavily into carbon capture, which I think will become an industry itself into the future. All right, here's a question from Believe the Hype. Would you recommend to start dividend investing ASAP with little money, or go into growth stocks early, and then once you have a good gain and a good profit from those growth stocks, move that money into divs, meaning dividends? I just don't see the benefit of getting $3 dividends and the stock not moving up at all, while I can still invest in growth stocks and get more gains so I can think about the dividends later. Maybe another question would be how much money is realistically needed before you even start thinking about dividends. Don't like that idea. So I wouldn't even use the kind of framing you're using between dividend stocks and growth stocks. I like to think of them just as businesses in most of my analysis. And frankly, I think there's plenty of dividend stocks that can match or beat the total return of most growth stocks over time. For example, Visa I've been buying, that's a dividend growth stock, and I think they'll outperform many different growth stocks in the market. Microsoft is a dividend growth stock, also the top stock in the S&P 500 and a high, fast-growing tech company. So if you're a young investor, I would not buy the kinds of dividend stocks where it's like you get a 8% yield, but the value of it's going down over time consistently and their earnings are declining, etc. You need to focus on a company that is growing long term. That can be a small growth rate if you're getting the stock at a very cheap valuation. Like, for example, Altria, it grows at around 3 to 5% a year, earnings and dividend, but you're buying it at around an 8P ratio, so 8 times earnings, and you're getting a 9% dividend yield, and I was getting a 10 plus dividend yield over time. So I think that will actually perform well over time. So I would just break the dichotomy of thinking dividend stock, growth stock. Just think about businesses and how you think they're going to grow over time based on their valuation. All right, so here's another question. How much time did you put in your videos before versus after the delivery change? Examples: editing, researching, script writing, voiceovers, etc. So this has actually been a big improvement. Before, I used to basically write a research paper or essay before every single video, and that would take so long. Realistically, it would be like 2 to 3 days of research and writing it out, and then you record it, and then you have to edit down the audio and add visuals on top of that, and that just took forever. And now some of my recent videos, like my recent portfolio update, and prior to that my Hershey stock analysis, some of those take basically like 5 hours max, maybe like 3 to 5. And that's because I basically don't have to do this massive research project every single time and write a whole essay on it. And I can make it more off the cuff because a lot of the stuff I already follow anyways. So I already have pretty developed thoughts in my own head because this is an interest of mine. So I'm already thinking about this stuff every single day anyways. So I can just kind of flow off the cuff more, which is nice. And because of that, you're probably going to be getting more videos at a more consistent rate, which I like. So look forward to that. All right, so the next question. How do you buy your stocks? Are these fractional stocks or whole stocks? And how does this work with the drip stocks? I get dividends, but it's not always enough to buy new whole stocks. So how do you calculate the drip if you can't use the dividend of a specific stock to buy new stocks of the same company? So I think this will vary slightly in all the different brokerages, but I use Merrill Edge, and for them, you buy in whole stocks, but you're allowed to reinvest for fractional. So, if I buy Visa, I'll buy 5 shares, but my dividend for Visa is not enough to get an entire share yet. So it will give me like 0.25 every single time a dividend comes. And most brokerages these days are allowing fractional shares. So I think long term, this is a development that is moving much and much more in the favor of dividend reinvestment and fractional share investing. What are your thoughts on Texas Roadhouse stock, ticker symbol TXRH, and would you consider adding it to your portfolio? So the restaurant, I haven't been there in a very long time, so I'm not that familiar with their experience, although I liked it last time. I think they had peanuts there or something, and like buttery rolls. But in terms of the stock, the business performance has been fantastic over the past couple of years, and their earnings are growing at a very high rate, double digits basically every single year. And because of that, the stock price has followed suit following that trend. So it is an interesting one, and I suppose I can add to my watch list. But if I'm being honest, I haven't done enough of a deep dive on the company to consider it as part of my portfolio yet. All right, now I'm going to do some questions from Patreon. You can sign up at patreon.com/dividenddata. So first we have D. Cotton. Sir, after a stock is bought, how long does it take to determine if it's on track? What markers should I be looking for? Okay. So this is actually an interesting question, and I'm going to use something that I learned from Warren Buffett here, which is basically that every time you should buy a stock, you should ideally write down your logic for why you bought it at that time. So if you think it's going to be a short-term trade, or if it's a long-term investment thesis that you expect it to grow this much over time and the business is moving in this kind of direction. So you have kind of milestones you're looking for. So if you write those down at the time of buying, then you will refer back to those. Because the big main point here is that don't look to stock price to determine whether or not it's on track. That has nothing to do with it. You want to focus on the actual business performance and whether it's matching what you initially expected. So for example, some of the stocks I've sold were Walgreens at Walgreens Boots Alliance, and it's because it contradicted my initial thesis. Their free cash flow, earnings, everything just declined out the wazoo, and the stock has just tanked. So it didn't meet my thesis, and I sold when it started to change in that direction. And because of that sell, I missed so much of the downside and preserved so much of my capital. I could say the same thing about Intel when they reinvested so much into these factories and their earnings collapsed. My thesis completely changed around the company, so I sold. It wasn't on track in that scenario. That's why I decided to sell. And there's many other examples of that. So you always have to reference back to why you bought the stock and what you were expecting in terms of the business at that time when you bought the stock. And just because the stock price performance hasn't been good, that doesn't mean it's not on track or going to end up being a good investment. Look to the business performance. In a mature business, that would be things like, their earnings, free cash flow, dividends, etc. But if it's a growth company and they're not even at the monetization for some of their new products, like for example, Tesla, I look towards things like, how is their autopilot progressing with their AI? How is the Optimus program? How far along is that going to be? Is that something that's going to be 5 years out, 10 years out, 15 years out? Is it still going to happen? Those kinds of questions. All right, so here's a question from Andrew Schneider. How do you feel about Berkshire Hathaway buying up OXY stock, that's Occidental Petroleum, during a relatively strong market for oil and energy? You've commented before about buying oil stocks during the bust cycles and holding off buying more at these higher prices. So I'm curious what you think on the matter. The big question will be the stability of the price of oil and whether or not companies will ever let inventory get back to the 2020 lows again. So yes, they have continued buying Occidental Petroleum, and Buffett actually has a pretty big history with the company in that it was something he bought a lot in 2018 and 2019, and it actually turned into one of his mistakes, and he ended up selling it and buying back in during 2021, 2022, and 2023. And I think definitely during 2021 to 2023, it probably was a good time to slowly add, considering he didn't have a position. And Occidental Petroleum was very cheap for a period of time where I think it was about 3 or 4 times free cash flow generation in late 21, early 2022. And they hadn't brought their dividend all the way back yet. They were paying off debt, which was a big problem with Occidental. So I think he likes the management there and basically saw them executing all the plans he wanted them to with that influx of cash, paying off the debt, etc. But in general, my approach with oil investing is you buy during the bust cycles only if the price is low enough during those bust cycles, and then you ride the booms. So here's a question from Lincoln Gaffney. Given you invest in stocks in controversial areas like tobacco and oil, do you have a moral limit to what you will and won't invest in, like firearms or defense contractors, for example? In all of those categories listed, no, I don't have a moral problem with them because I think they all have a need and use in the market that people want and have demand for. And you can make a positive argument for anyone. I personally think people are informed about all the health risks around tobacco products, cigarettes, nicotine-based products, everybody, for the most part, knows the addiction and various effects. But I think people have the right to choose to smoke those things or indulge in those substances, and that's completely fine. It's a personal choice. And oil, I have no negative thing around because I think it's basically fueling the modern economy and the whole industrial revolution that got us to where we are today. And I think in general, we want increased energy production to have a better society, both for the first world and developing countries around the world. And I'm pro all energy solutions as well. I think we need a all-around approach. Firearms, I don't have any problem with firearms companies. And with defense contractors, I think they're definitely a needed part of the world in that countries need to be able to defend themselves, and I support the United States being able to defend itself. My moral quandaries come more from a political sense, not a investing or economic sense, where, there's, and I don't want to get all political here, but, there's problems over time with the military-industrial complex basically owning politicians and lobbyists, lots of incentive structures in place in that field. But in terms of defense contractors, I'm actually more interested in startup defense companies, whether that would be things like Palmer Luckey's company, Anduril. That's very interesting. So my problem with the defense contractors being Lockheed Martin or Northrop Grumman or any of those companies are actually more from a business argument in that I think they're not that innovative anymore, and their cost-plus model basically leads to lots of negative incentives around keeping costs high and kind of ripping off our own government in that way, which I'm not exactly a fan of. All right, back to the YouTube questions. I'm going to do a few more. What is your view on bank stocks and investment bank stocks like JP Morgan, Bank of America, Morgan Stanley, or Goldman Sachs? Why don't you have any in your portfolio? Well, for banks, if I'm just being honest, I'm not that informed on how to value the companies. So it's like an entire category I need to do much more research around. All right, here's a question. Do you plan to retire on dividends, and how much would you need? So I am planning to plan as though I'm going to live off of dividends. So the goal is basically by the time that I'm old to have 6 figures or so of dividend income rolling in at all times. But the ideal would be that I didn't have to live off of it and I can just continue to reinvest it indefinitely and increase my compounding to a massive degree over, 40, 50, 60 years even. But for that to be the case, I would probably need to own other assets that pay me cash flows that I can live off of, or just have a high income that comes in at all times, even when I'm old. Are you going to sell your Tesla position after the recent rally in the past 3 days? Absolutely not. I am not going to sell my Tesla position. This rally is a drop in the bucket. Now, I do think it could underperform the rest of the year, and I'm actually hoping that happens so I can buy in again in the 150s to low 200s probably. But Tesla for me is a multi-decade position. I've already owned it since 2016, which was my first buy, and I'm planning to hold it really for the future because I think autonomy is going to be their biggest near-term business segment, and that's really not going to get monetized until starting in the next 5 years. And then the humanoid robot project with Optimus, that could be bigger than the entire car business, and that would be probably 10 years out from even hitting any kind of scale. So this is a stock where it's really just getting started, and I'm not planning to sell it anytime soon. Any high dividend stocks as good quality as MO and EPD? Well, on my website, I actually have an entire thing under the dividend screener currently, where it shows top high yield dividend stocks that I curated. And in that category, I would probably throw in Philip Morris International as well, and maybe Realty Income. But if I'm being honest right now, I really am not buying any other high yield stocks. My focus has shifted more towards total return. All right, here's a question from Chris. How would you have invested differently if you were saving for a house, yet are seeing bussin' stock prices? My wife and I have been saving for a down payment while I'm cash flowing my master's, and it's really hard not investing. I want to, because if I did, I would have way more Tesla stock at last year's prices. So this is actually an interesting problem. If I was saving for a house, I would probably have that down payment put in treasury bonds right now, where you can basically just be getting 5% annually risk-free. However, I wouldn't recommend this for anyone that's just a random person, obviously, and none of this is personalized financial advice. But what my approach is that I'm mostly investing all of my income for the most part, aside from I have some savings I've started to put aside for, but that's more of a cash position so that I have money to buy stocks. Maybe I'll come back to this and make a video on it when I start saving to buy a house. The real answer here is that everyone has different personal goals, and whether that's short-term, long-term, etc., especially if you have a family, and investing is not always the number one thing going on in your life. And saving for a home can be very good foundationally to, root your life in a location and build equity in your home. And along with our financial independence kind of argument, when you put a big down payment on, and if you pay off that house as early as possible, then you basically have this entire asset that's fully paid off, and you can live in it rent-free, no mortgage payment, etc., which is a huge plus in terms of your own financial security. So ideally, once you reach retirement, you want to have a fully paid off house so you don't even have that kind of cost. So don't feel bad at all about saving towards that and not investing as much in stocks at the moment. I personally am just in a phase of my life where I'm putting all of my money towards stocks, and then I have some cash that I use to reinvest in my business and build a cash position in case there's some stock market crash that I can take opportunities to buy. For example, buying Tesla stock at last year's prices, I would have loved to buy 3 times as much, but I didn't have as much cash available at the time. So I've started saving more cash for those kind of reasons. All right, so the final question. Will illegal immigration, war, and inflation destroy our country if Biden gets another 4 years in office? So the answer when it comes to destroy our country, no. And that answer goes to both Trump or Biden because, people, they're equally as split. You got people that think either of them are going to end the world, and newsflash, neither of them are. And the reality of the situation is that the United States has so much outside of being impacted by the government in our free market system and our innovation and technology, etc., that the economy will continue to grow long term, almost irregardless of what's even happening in politics. And from a personal level, you have far more control over your own life, and whether or not you build wealth personally, you have far more control over that than anything relating to politics. For example, Warren Buffett's invested through 10 presidencies and made money through all of them. Getting out of the market because of any presidential election is 100% a mistake all of the time. I would not bet against the United States free market system because I would not bet against Americans, and I would not bet against human innovation. With that, happy 4th of July. Happy Independence Day. Thank you for watching Dividend Data, and we'll be back to our regularly scheduled programs. Take advantage of the 50% off summer sale. Use the promo code SUMMER at checkout, SUMMER. See you later.